The key to success in financial investment isn't about what you don't know, but rather about what you already know but haven't fully understood or effectively applied. And the biggest obstacle you face often doesn't come from the market, complex indicators, or price volatility. It comes from within, from ingrained habits, unstable emotions, and long-held misconceptions that shape how you trade. Think about it for a moment. How many times have you pinned your hopes on a magical trading strategy, believing it would solve all your problems? How many times have you felt confident about a new indicator or a hot trading method you came across online, only to end up in a cycle of failure, frustration, and confusion? I've been there too. I've wandered through countless forums, searching for the ultimate trading secrets, convinced that finding the perfect system would automatically bring me profits. But what happened? Time after time, I watched my account evaporate, powerless to stop it. I've lost sleep, skipped meals, and blamed myself for not being good enough. I even wondered if trading was simply not meant for me. But here's the truth. Success doesn't come from how much you know about the market. It comes from how well you can control yourself. Trading psychology, risk management, and discipline. These are the real keys. They aren't things you can master overnight, but if you understand and truly apply them, they will form the foundation that takes you further than you ever imagined. Take a moment to reflect. Are you trading with a clear, well-thought-out plan, or are you acting based on emotions? Are you risking everything on blind hope, or do you have a solid risk management strategy? Remember, the market doesn't betray you. It simply reflects who you are. The numbers on the chart don't cause harm. It's your unstable emotions and lack of discipline that do. Today, I want to share lessons with you that don't appear on charts or in textbooks, but that are essential for success in trading. I want to help you reevaluate what truly matters, so you can not only survive, but thrive in this competitive market. And for those discovering our YouTube channel for the first time, welcome. This is a space where I share real-life experiences and lessons learned from my own failures, helping you avoid making the same mistakes. Our channel focuses on finance, from Forex trading and cryptocurrency investment to personal financial management, with the goal of providing you with not just knowledge, but the right mindset to grow your income and build financial freedom. If you find this content helpful, don't forget to click like to spread this message to those who need it. Share this video with your friends and others who are struggling on their trading journey. And most importantly, hit subscribe so you won't miss any of our latest videos, because each one will take you one step closer to the success you deserve. I know you may feel skeptical. Is this really what you need? I've been in your shoes, doubting everything after so many failures. But let me tell you this, success doesn't come from trying to control the market. It comes from learning to control yourself. If you're ready to face the truth and change your mindset, I believe you've already covered half the journey. Let's start this journey to conquer the market the right way today, because you deserve success as long as you dare to face challenges and take action to change. This isn't just a video, it's a gateway to a new chapter in your financial journey. Are you ready? And to step through this door with confidence, you need to understand that there are three essential pillars in trading and investing: strategy, psychology, and risk management. These three elements are like the legs of a tripod. If one leg is missing, the tripod will collapse. But if I were to choose the most important of the three, I wouldn't hesitate to say it's risk management. The reason is simple. Even if you have a great trading strategy or a strong mindset, you'll never achieve a 100% win rate. One mistake in risk management can wipe you out completely. Imagine playing a coin toss game with a 50-50 chance of winning or losing. If you bet all your money on a single toss and lose, you'll walk away empty-handed. But if you divide your bets into smaller portions, you can play multiple times, learn from your mistakes, and gradually improve your decision-making. The same principle applies to trading. Risk management ensures you stay in the game when losses occur, giving you the opportunity to learn and refine your strategy and psychology over time. Think of a house. No matter how beautiful or tall it is, if its foundation isn't strong, it will collapse in a storm. Risk management is the foundation of your investment house. It shields you from major risks, giving you the time and opportunity to build other aspects of your trading on solid ground. That's why you should start slow. There's no need to rush in with a large amount of money. Begin by creating a detailed plan and always ask yourself, if this plan fails, am I prepared to lose this amount of money? If the answer is no, adjust your risk immediately, because your capital isn't just money. It represents your time, your experience, and your chance to continue learning and improving in the market every day. One thing to remember: being a great analyst or an outstanding trader doesn't mean you'll always win. A skilled analyst might identify excellent opportunities, but they can't guarantee a 100% success rate. It's like a skilled hunter. No matter how good they are at choosing the right time and strategy, there will still be moments when they miss the target. And in those moments, risk management is what prevents them from losing everything, ensuring they have the chance to come back, improve, and try again. So always remember, risk management isn't something you do when you have spare time. It's something that must come first. It's not just a tool for short-term survival, but the foundation for building a long-term career in trading and investing. By prioritizing risk management, you're not just protecting your capital, you're protecting your future in the market. Start today and let it guide you toward sustainable success. If we know nothing and invest in a financial product at any given time, there are only two possible outcomes. The price goes up or the price goes down. The win rate in this scenario is 50-50, just like flipping a coin. However, experienced and skilled investors can often choose entry points with a win rate higher than 50% distribution. Yet, even the best investors will never achieve a 100% win rate. This is precisely why risk management becomes the key factor in ensuring your survival in the market. This is where most people get it wrong. They believe that finding a perfect trading strategy will automatically solve everything. They pour their time, money, and effort into learning how to analyze charts, study the markets, and search for sophisticated tools and indicators, all while completely overlooking the importance of risk management. For many, risk management is seen as a secondary step that can be learned later, and that's exactly why so many investors fail. Let's face the reality. No matter how good your strategy is, or how skilled you are, you cannot avoid losing trades. No one in this market wins all the time. One large loss, if you don't know how to manage risk, can wipe out all your hard work, money, and time in an instant. Countless examples prove this. Traders who were confident they had found the ultimate strategy, only to be defeated by their own lack of risk control. Imagine this scenario. You've just learned a new trading strategy and feel very confident about it. You decide to invest a significant amount of money into a single trade, convinced that you've discovered the Holy Grail. But the market suddenly moves against you. That trade doesn't just lose money, it crushes your confidence. Without proper risk management, one wrong trade can destroy everything. That feeling is far more painful than losing a small amount, but still having enough capital to learn and recover. Risk management is not optional, it's mandatory. It's not something you save for later after you've figured out how to make money. It's the first thing you should focus on. Without capital, every strategy and every plan becomes meaningless. Think of risk management as armor that protects you in battle. Without it, no matter how powerful your weapons are, a single unexpected blow can take you down. The key to success isn't about winning a few big trades, but about consistency over the long term. Great investors don't just focus on making profits, they prioritize protecting their capital above all else. To do this, you need to clearly define how much money you're willing to risk on each trade, commonly referred to as 1R. This is the amount you're prepared to lose if the trade goes against you and hits your stop loss. Setting this limit not only helps control risk, but also gives you confidence in your decision-making. You need to understand, a great analyst or a skilled trader doesn't survive by always being right. They understand that the market is never certain, and their greatest skill is controlling losses when they're wrong. Like a professional athlete, they don't win every game, but they know how to maximize their advantages and minimize the damage when things go wrong. So why do you still think risk management is something to learn later? This misconception often stems from the allure of promises of quick riches or foolproof strategies. But the harsh truth is, there's no perfect method, no guaranteed tool, and without risk management, the market will quickly push you out of the game. Remember this, risk management isn't just another skill, it's the foundation that allows you to survive and grow. If you're serious about your investment journey, this is where you need to start. Don't wait until you've lost most of your capital to realize its importance. Start now and you'll see the difference. Risk management not only ensures your survival, but also paves the way for you to build a sustainable and successful investing career. In long-term investing, risk management is an essential factor, yet it's often underestimated. Many people entering the market believe that risk management is something to worry about later, while choosing the right strategy is what matters most. This is one of the most common mistakes that has cost countless investors dearly. Risk management, at its core, is about how you allocate and protect your assets. For example, let's say you have a large sum of capital, like $1 million. The question is, how much will you allocate to real estate, stocks, gold, or crypto? Within stocks, how much will you invest in individual companies? Safer investments, such as real estate or bonds, should take up a larger portion of your portfolio to maintain stability, while higher risk investments, like small cap stocks or cryptocurrencies, should only make up a smaller percentage. Why is this important? Because the market is always full of surprises. If you place too much capital and hope into high-risk investments with the expectation of quick profits, you could face serious losses. Instead of focusing on potential profits first, think about the risks. This is the mindset every successful investor must adopt. Protect your capital first, and the profits will follow. By prioritizing risk management, you ensure that your investments remain sustainable, even during turbulent market conditions. This disciplined approach not only safeguards your wealth, but also allows you to seize opportunities without jeopardizing your financial foundation. A simpler example is trading. Win rate doesn't determine everything. Even if your win rate is only 30%, you can still be profitable if you know how to manage your risk. This may sound unbelievable, but it's based on a simple concept, the 1R. Risk unit, the amount of money you are willing to lose on a single trade. For instance, if your 1R is $100, each time you lose, you only lose $100. However, when you win, you might make $300 or even $500, which is equivalent to 3R or 5R. The value of 1R isn't fixed and must fit your situation. If you're just starting out, 1R could be as little as $1, $5, or $10. The important thing is that this amount doesn't make you anxious when you lose, but is also not so small that it feels like your effort isn't worthwhile. As you gain experience and your account grows steadily, you can increase your 1R value, boosting your profits. On the flip side, if you encounter a series of losses, reduce your 1R to limit the damage. This approach helps you maintain stability and builds a solid foundation for long-term growth. Most people make the same mistake. They devote all their time and energy to learning how to find entry points, magical strategies, or complex technical tools. But the truth is, even if you discover an incredibly accurate method, if you don't know how to manage your capital, a short losing streak can still wipe out your account. Conversely, someone without an outstanding strategy, but who manages their risk effectively, can survive, learn, and gradually achieve success. Risk management isn't hard to understand, but it's often overlooked. Sometimes we focus too much on complex, attractive things like new strategies or indicators and forget that risk management is the foundation. It's not something to learn later. It needs to be your priority from the start. The market doesn't forgive carelessness, and if you don't prioritize risk management, failure is inevitable. Here's a small tip for you. Always keep your capital safe enough to survive. Never invest all your money into a single opportunity, no matter how promising it seems. Always prepare for the worst-case scenario and ask yourself, if this investment fails, can I accept the loss? If the answer is no, reduce the amount immediately. Success in investing doesn't come from one big win, but from consistency over the long term. Be patient and don't try to double your account overnight. Risk management is the life vest that keeps you afloat through rough waves and the foundation upon which you can build a sustainable investing career. And above all, never forget, keeping your capital safe is the first step for any strategy to work. Wishing you success on your investing journey, and may risk management always be your guiding principle.